Wednesday, August 3rd, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how the central bankers and governments, for that matter, are trying to keep inflating the system. Yes, they're talking back the accommodation, be it monetary, even fiscal. But I will show you, especially how the Bank of England is trying to keep the Ponzi scheme going, so to speak. Before I go into that, though, I'd like to make a few comments here. First, about the purpose of this channel. And yes, I do see comments, the doom YouTubers and things like that. And I guess it does feel sometimes like when I'm pointing out to things that are going wrong, the way they are cheating us fiscally, and in all other aspects of life, the powers that be. And sometimes I wish I didn't think critically and know about all these things. But I think it's a good thing, though, to know what's going on, because it protects you and it actually allows you to have a chance to live a better and happier life. Life is not perfect, of course, but and that's what I'm trying to do here through the monetary economic system, to warn people. Some people won't want to listen to it, and that's fine. That's fine for me. I still have thousands of people who still listen to the message. And yes, the other point I'd like to make this morning is about what's going on in the southeast, in Asia, that is Taiwan. Some might think that the Chinese back down. They've shown weakness. They didn't blow Nancy Pelosi's plane out of the sky. I think a lot of people might have been expecting that, but I think the Chinese are not as hasty as that, and I think what's going on there is open maybe a Pandora's box, and I wouldn't underestimate the Chinese. But the other thing I would say, listen to Norman Dodd's interview with G. Edward Griffin from the early 80s. And you'll see how the people in charge pull the strings. And we probably don't even know who really is setting policy. But I think I have a good idea. It's to do with the tax-free foundations. So I highly recommend you watch this interview. It will help you understand how the world operates really beneath the surface. But the biggest point I take from this crisis, for example, the Telegraph reports, world holds its breath as Nancy Pelosi meets with Taiwan's president. So yeah, it's fear. People, they want to keep us in fear, and that's what this does. I think a lot of it is kabuki theater. So that's all I have to say about that. Back to the central banks and governments trying to fool us, trying to keep us in the game. And what's the game? Well, it's borrowing and spending. And I'll give you an example of how they've done that to me. And you might think, oh, I didn't think you borrowed. Well, we have a car that's all paid for. We bought it in 2010. It's a diesel car. But from next year, if you're driving anywhere in London, and that's Greater London, not the city of London, within the 32 boroughs of London, you're going to have to pay £12.50 every day you drive out of your house, unless you have a diesel car that's not older than a certain age, and our car is too old. So they're forcing us as well. to get rid of a perfectly good car and get another one. So what my wife and I have done, we've part exchanged our car for a new car, and we've got a 4-year lease, and it's not bad, the payment. And if the worst comes to fruition and things get bad financially, I can always pay it off. But that's what they're doing. And yeah, and that's what they want you to do. They want you to keep you in the game. So you see, no one's perfect, not even Monaco 64. And my wife is pretty upset about that. And I am too, in a way. It's a nice car that we got, but it's not the point. Our old car has only got 37,000 miles, and it's about 12 years old. So, which isn't much, really. And it's actually worse for the environment because they're having to build new cars because all these old cars are going to be like useless. So you kind of wonder, right? So recently I made a video about the Bank of England, how it's been fudging the data, the CPI data. And for Bank of England, I think we need to include the government as well, because the Bank of England is going along with the government's data. So some of you know, some of the long-term viewers know that I've used the Bank of England inflation calculator, which is a good instrument, a good tool. It goes back to 1209. But recently, and it was, when was it? July 20th, I did a video, or the day before, I think, I did a video, and I used that inflation calculator. And I noticed that the numbers didn't really correspond to the numbers that I remembered from last year. For example, now the Bank of England calculator says that CPI averaged 1.9% per annum since 1997 to 2020. Why is 1997 important? Well, that was the year that the Bank of England was given independence by the government, and they had to keep a 2% target. While last year, when I was using that calculator, back in June, I think, I looked at that same period, and CPI had gone up by 2.7%. So what they've done, they've switched the way they calculate. They're using another CPI. It's called CPIH. It's from May this year. So why would they do that? I mean, the only entity it really helps is the Bank of England. And why would the government do that? Well, because they're working together. So now they're basically changing history, saying they didn't inflate as much, probably to try to put the blame on the current inflation on Putin and COVID, even though they've been inflating forever. If you know the definition of inflation that I've put across thousands of times here on this channel. So the other thing it does, we know now that the numbers we're getting since May are not going to be real, the real reflection of the rise in prices, because they're using this pretty soon. They're not going to calculate anything in the CPI. There will be nothing in the basket, and inflation will be zero, right? I'm being a little bit facetious here, but and I'm going to come back to the Bank of England, how they're trying to keep the Ponzi going as well. But before I do that, I want to show you something that I found as well that is happening. This kind of tinkering with the data is not only happening here, but also in the US and probably a lot of other places. We're told usually that it's the Chinese who lie about the data. But I saw a headline yesterday, and it's from CNBC. You have to excuse me, but it was helpful. And it says rent prices are soaring in these 5 US metros. Here's what to know before moving to a cheaper area. And then towards the end of the article, I've did a screenshot and I've highlighted here. It says rent prices for single family homes swelled during the first half of 2022, hitting a national average of $2,495 a month, a 13.4% increase compared to the same period in 2021, according to a new report from national real estate brokerage House Canary. When I saw that, I told myself I need to look at the consumer price index that the government publishes, because they calculate housing costs through what's called owner's equivalent rent of residences, which is basically a survey, something that these people make up. They don't go and ask House Canary, right? So as you can see here, year on year, rent of primary residence or owner's equivalent rent of residences, according to the government, have only gone up by 5.8 and 5.5 respectively, while in the real world has gone up by 13.4. So basically, the CPI is not really reflecting the rising prices. And again, that helps the Federal Reserve be less hawkish, because the data should be a lot higher, right? And they have to raise rates a lot more. But what I really wanted to show you today here, and this is quite serious, I would say, and dangerous, and not to be a party pooper, not to be too, non-risk taking. I would say to young people or people who are going to be first-time buyers, if you are in a good financial situation, if you have really good jobs, both spouses, and you feel confident, go ahead and take the risk. But for the majority, I think people need to listen to this and be aware that this is very dangerous. So this is the story here. First-time buyers can borrow £50,000 more as mortgage rules relaxed. Experts warn some banks will continue to enforce more rigorous tests despite rule relaxation. So who's relaxed these rules? Well, let's quickly read here the beginning of this article, and then we'll go on to look at the markets. It says first-time buyers can borrow nearly $50,000 more after the Bank of England relaxed its mortgage lending rules. Policymakers have removed a regulation that means banks and building societies can only grant mortgages to borrowers if they can afford to make payments at 3 percentage points above the lender's standard variable rate. These rules were introduced in the wake of the financial crisis, the 2008 financial crisis, to protect consumers, but have been criticized for restricting lending. Well, despite that, we're seeing house prices go to record highs. I don't see any restriction. So there you go. It will put maybe not millions, but hundreds of thousands of families in financial, I would say, danger, because they're going to take up this offer because it's getting more and more unaffordable to buy a first-time house, not just because of house prices, but because of the increase in utility prices, food prices, energy prices, gas and electricity are going up as much as a mortgage payment on a really nice house. So there you go. They're trying to keep the Ponzi going, if you know what I mean. They want people to keep borrowing and spending, because that's how the fiat currency system keeps going. Yes, you can try to benefit from that, but be aware that it's very dangerous. So with that, let's quickly look at where the markets are this morning. It's 8:30 a.m. London time. We've got spot gold at 1766. It's up $6. Yesterday we got up to around 1788. So gold did very well throughout the day yesterday, and it came off on the back of some contradictory comments by Fed governors, contradictory to what Jay Powell had said last week in his press conference. So bond markets sold off quite sharply yesterday after those comments, and gold and silver sold off as well. I'm not concerned. Overnight, the high's been 1770 and the low 1754.50. Yeah, silver has taken a bigger hit than gold. We're now below 20. We're in 1989, down 8. High's been 2008, low 1976. To the stock market, the Dow futures is up 100. NASDAQ futures, is unchanged. And the S&P is up about 8 points. FTSE is down about 38. And the Euro Stoxx 50 is up around 6. To the currencies, sterling is up a quarter at 121.97. The euro is up 0.2 at 101.84. And the dollar has rebounded a bit against the yen since yesterday, even though it's unchanged overnight at 133.20. The dollar is unchanged versus the Swiss franc, 95.70. And the dollar is down 0.25% versus the yuan at 6.75. The dollar is up about 5% versus the ruble at 61. I think we got below 60, overnight. We got down to 58.20, and it's now rebounded, the dollar versus the ruble. Aussie dollar is rebounded a little bit. Here is up 0.25%, 69.36. And the dollar is down 0.125% versus the Canadian dollar, 128.62. And the Kiwi dollar is up about 0.2 at 62.64. To the general commodities, WTI crude is down 0.75% at 93.11. Brent crude is down 0.75 as well at 99.40. And high-grade copper is down 0.5% at 3.50. U.S. nat gas is up 0.75% at 7.75. And let's quickly look at the Dutch TTF natural gas futures. Yeah, that's pretty steady, trading just above 200. So hasn't gone anywhere in the last few days, but still more than 10 times higher than it used to be prior to 2020. It used to trade around 10 or 15, and we're now trading 202. And to finish off, last but not least, yes, we had a huge range yesterday, very volatile. The bond markets or treasury markets could have had something to do with China and Taiwan, but also with these Fed officials. They were a little more hawkish than Mr. Powell. So right now the 10-year yield is at 277. It's up 2 basis points. Yesterday morning, I think we were around 255. The 2 years at 307. So I think that was around 288. So that rose quite sharply for a short end treasury. And of course, the curve is now still inverted by over 30 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.